Thank you, first of all. Thank you to Colleen and to Newry Chamber of Commerce for the opportunity to participate in this webinar today. I start, if I may, by giving you a quick introduction. My name is Jonathan Walsh, and I'm a director of a boutique business consultancy, strategic planning and services business here in County Down. Prior to working in consultancy, I spent 7 years as operations and commercial director within a commodities industry where, amongst other things, I had responsibility for international procurement and international sales. I've also held senior roles both home and abroad in the circular economy, manufacturing, construction and technology industries. In addition to work experience, I hold post and undergraduate qualifications in economics and strategic management, and I'm a fellow of the Institute of Consulting. The reason I want to give that background is around mid-2017, I started working directly to assist companies with their Brexit planning. And since then, I've worked personally with about 100 plus businesses on this subject matter, and I've had clients here in Ireland, GB, and across Europe. In the following presentation, I've been asked to provide a quick but hopefully comprehensive overview of the key elements of the UK-EU Trade and Cooperation Agreement and the Northern Ireland Protocol. And I'm focusing in on the relevant points for businesses here in Northern Ireland. At the outset, I'd like to say that there's no intention on my part to underplay in any way the difficulties and challenges businesses are facing, as I'm aware from my involvement with clients directly. But I want to try and remain optimistic and look for the silver linings rather than focus in on the clouds. And that's what I'm going to try and do within this following presentation. Hopefully the slides will move with me. So first of all, a quick recap of what happened. Back in early summer 2016, we all went to the polls to vote on the UK's membership of the EU. Just in a personal front, back then I was in my commercial and operations role in the commodities industry. And I can tell you from personal experience that the result that emerged was a major shock to the system that day. Why? Because many purchases we made were in US dollars, whilst the majority of sales were in sterling and euro. So even with planning in place and having hedged currency risk, we were left massively exposed, as I'm sure many businesses were, because of the major change in foreign exchange that day. Several years passed and we had a handful of British Prime Ministers between the referendum and the actual triggering of Article 50, and an agreement finally being reached in the autumn of 2019 that it would eventually lead to the UK officially leaving the EU on the 31st of January 2020, and then entering into the transition period that ran until last December, 31st of December of 2020. Key dates for us on the passing of the withdrawal agreement in January last year, and then the signing of the Trade and Cooperation Agreement on Christmas Eve. So what was the reason, the whole of the first instance, that prevented the UK on moving from triggering of Article 50 back in 2017 to reaching an agreement that would set the UK on a timetable for officially leaving the EU? The withdrawal agreement covered three main areas: the settling of any UK financial obligations that they had made or benefits that they enjoyed as an EU member state, a bilateral agreement on the protection of UK and EU citizens' rights living in each other's jurisdictions, and the main sticking point, how to reach an agreement that could prevent or remove the need for physical checkpoints and infrastructure on the island of Ireland. This is the area that led to multiple votes in Parliament around this time, 2019. We were all glued to our TVs, or at least I was, and eventually the fall of Theresa May as British Prime Minister. Then out of nowhere, and it was out of nowhere for many of us, in October 2019, it was announced that the UK and EU had been able to reach agreement and overcome the impasse. A new protocol replacing the previous protocol that had tried and failed on multiple occasions to get passed in Parliament was published, and the UK went to the polls on the 12th of December 2019 for a general election, which led to an 80+ majority for the Conservatives guaranteeing that this agreement the hurdles that others had failed at. Containing 18 articles and 7 annexes, the protocol covered 3 key areas: customs arrangements, VAT, and in addition from the previous protocol, an arrangement for political consent on the island in Northern Ireland. Rather than go through the individual references to these areas within the protocol themselves, I will consider the implications in terms of trade scenarios in later slides. But for those interested, the main articles to look for are Articles 4 and 5 for customs arrangements, Article 8 for the VAT and excise, and Article 18 for democratic consent in Northern Ireland. So, on Christmas Eve last year, it was announced that the UK and EU had reached an agreement on trade and cooperation agreement. The headline used for this trade agreement was a zero tariff and quota-free movement of goods between the UK and EU and vice versa, as long as they met rules of origin criteria as laid out in the slide at the moment. Northern Ireland already benefited from such arrangements under the protocol, so our interest here turned to other elements of the agreement that had relevance to Northern Ireland. As Colin pointed out or alluded to earlier on, rather than reading the full 1,246 pages, I concentrated on part 2 of this agreement, which was 200 odd pages covering trade and other economic aspects of the relationship. I've listed here a number of those areas that I feel are most relevant for businesses here. Road transport agreement. Prior to this, we had a massive rush and a push by carriers to try and get ECMT permits so that they continue to be able to operate not only across the island of Ireland, but transiting over GB land bridge and into continental Europe. We have some agreements around data transfer, provisions to provide for continued free flow of personal data. On the basis that this is hoped to be an adequacy agreement is expected to be reached within the next 6 months. Rules of origin implications for GB-NI trade if the goods are deemed at risk of entering the single market. The agreement actually brought in some difficulties that hadn't really been foreseen or worked out in terms of the protocol. There was risk previously around circumvention, but then there was other things we needed to consider around rules of origin. We can get a chance maybe to look at that later on. Big losses, in my mind, were the free movement of persons for both UK and EU citizens in each other's jurisdictions, and the loss of free movement of services. There's little in terms of agreement around UK service providers within the cooperation and trade agreement. What it means as a result is there's no mutual recognition of professional qualifications, and businesses that trade within other jurisdictions, member states of the EU, are now bound by those own country rules and regulations, and they could vary from member states. To me, there was a bigger announcement earlier in December in some ways than the actual agreement itself for businesses in Northern Ireland. That was the agreement reached in principle on 8th of December 2020 and then outlined and detailed in subsequent guidance and command papers on the 10th of December. And this was an agreement that would lead to the full implementation of the Ireland-Northern Ireland Protocol. At that time, we had concerns around internal market bill and a new finance bill that was going to be passed through Parliament. And in both cases, there was challenges, I'd say is probably the easiest word to use for the protocol, because they appeared to make unilateral decisions which worked against or went against international treaties. Those were removed when we got word on the 8th of December of this agreement in principle of full implementation. Key parts in that were around export declarations to Great Britain. They would no longer be needed. This was a requirement laid out in the Union Custom Code for goods leaving the Union previously. There was an agreement on the supply of medicines, which is obviously important at the moment more than ever. supplying certain chilled meats and other food products to supermarkets at grace period. And there was also some clarification and application of state aid under the terms of the protocol, an area that was going to be covered in one of those previous bills mentioned. Other key resources provisions that were introduced around this time and are of interest to Northern Ireland businesses were the introduction of XI EORI numbers for NI traders. Back in late summer, we got an announcement about the setting up of a new trader support service that would support businesses in Northern Ireland and suppliers in GB by providing a customs free at source customs declaration service for these businesses. The announcement of the UK Trader Scheme, which means that those businesses that can certify that their goods remain within internal UK customs territory do not need to worry about tariffs on goods that don't meet that rules of origin criteria. The Movement Assistance Scheme, which will allow businesses within Northern Ireland and more so their suppliers in GB to get export health certificates covered, the cost of official veterinarian costs covered, and phytosanitary inspections by government officials, the cost of these covered or waived for movements between GB and NI. A waiver system for duty on goods from GB to NI for those businesses or those movements that were deemed at risk, where the companies, traders in Northern Ireland could use their de minimis aid allowances to waive the duties that were passed or would be passed on to them. A new tariff rebate and proportionate tariff scheme, which at the time of writing and speaking, we haven't got the details of that announced, but we're expecting to hear about that in the coming days and weeks. And then arrangements, this was one particular requirement or issue for one of my clients, but something that's relevant. They would use stillages and returnable packaging for goods. And up until around late November, December, this is something Seamus will be more aware of than myself, no doubt. We were running into the problem that when these stillages, racking, whatever was returning to Northern Ireland from GB, they would require import declarations. And we finally got an arrangement in place that these could be instead go through verbal conduct declarations and an ability on GVMS to declare vehicles as empty, and that would give the people the GMRs, the carriers, the GMRs they needed to move the goods on. So there was lots and lots came out of nowhere. For us, came out of nowhere. For people like Seamus, Colleen, and others who were involved in the discussions and negotiations, it was after much hard work, no doubt, but those came about in the last couple of months, and they were very welcome for businesses here. Okay, the UK Trader Scheme, I've touched on this, but just to give a very quick overview. If a business can certify that they only supply goods within Northern Ireland and the UK customs territory, they were able to declare that those goods would not be at risk of entering the single market. This was a major announcement because up until the point that this was announced, in July 2020, last July, the EU had indicated that all goods moving from GB to Northern Ireland would be deemed at risk. So this was a major breakthrough for businesses here. Other goods that were always deemed to be at risk were goods that undertook some commercial processing within Northern Ireland, and there was derogations and exemptions met here as well. Those derogations were around agreements for certain industries and flexibilities for food for sale to end consumers, construction projects taking place within Northern Ireland, direct health and care provision, not for profit activities, and also an exemption for businesses, commercial processing businesses in Northern Ireland with turnover below £500,000 per year, which was a major breakthrough as well. Outside of that, for those cases not covered by the criteria or not able to qualify, companies not able to qualify for the UK Trader Scheme, UK government announced that they would make full use of the provisions within the protocol enabling tariff waivers and rebates. This was announced back in the first command paper in 20th of May 2020, and then followed up in subsequent documents. And this is where I briefly mentioned waiver schemes, and we also will have rebate and proportionate allowances and the proportionate schemes come into play. So what does this all mean in terms of Northern Ireland businesses? The details out there, it's widely publicised now, and we have moved to the new reality, which is trade after Brexit. The UK has left the EU. The transition period, the implementation period, as previously known, has ended, and we are now under the terms of the trade agreement and the protocol. For Northern Ireland specifically, and we're talking about the movement of goods, which is what the protocol focused in on, Articles 30 and 110 of the Treaty for the Function of the European Union apply to and in the United Kingdom in respect of Northern Ireland. What does that mean? Goods can still move between Northern Ireland and the 27 member states, declaration free, tariff free. And so we're going to look at a couple of different scenarios now. How has trade changed? So I've gone through these in terms of where the movements are originating and coming into Northern Ireland. So for movements from Great Britain to Northern Ireland, anybody who has suppliers within Northern Ireland will be now aware that there are new customs declarations requirements for these movements, and that those products deemed at risk of entering the EU single market will potentially require to pay tariffs. If you're using a trader support service, at this point you will be aware that soon in the next couple of weeks you will get a request for supplementary information as part of the simplified frontier declaration, which the trader support service can offer because you use customs freight simplified procedures as opposed to having to complete full import declarations. And this is where you will declare if goods are at risk, or provide evidence, or provide details of your involvement within the UK trader scheme, etc. Northern Ireland to and from Ireland and the rest of the EU, trade in goods should have continued unaffected. I'm conscious that there has been issues. I'm very aware from my client discussions that there is still there's still lacking information out in the continent, and some people believe that the arrangements that are there in place for the United Kingdom as a whole apply to Northern Ireland, but that is just getting that information out there. Trade should be as before. No borders, no new paperwork, no tariffs, and no regulatory checks required. Northern Ireland to Great Britain. As mentioned previously, this was something that was going to be covered within the Internal Market Bill, a unilateral decision being taken. But the agreement announced on the 8th of December allowed for movement of goods between Northern Ireland and GB to be unfettered. There was never going to be a requirement for export declarations and import declarations, but there was a requirement, we believed, under the Union Custom Code for safety and security declarations. That has been removed. So there's other changes that have happened in terms of transit. When the UK left the EU, it had already signed up to the Common Transit Convention, which meant that goods could transit with a TAD, a transit accompanying document, over the land bridge to, the GB land bridge between continental Europe and Ireland, and from GB into Ireland up to Northern Ireland through Ireland through a transit arrangement. This means that rather than having to open up, close up import and export declarations when they're moving in and moving out, they can go through with the one declaration in place and a transit accompanying document. Very simple traders Brexit checklist, which I hope and everybody will have already signed up to, but just to get a recap on it. Any company that is involved in moving products outside of the island of Ireland should should get their GB EORI number in place. Once they've got a GB EORI number, they need to get an XI EORI number. and that will allow them to make declarations in Northern Ireland. Their suppliers in Great Britain will also require an XI/EORI number, and it's also worth pointing out that if your suppliers in the rest of the world who are not already moving goods into EU, they will also require an XI/EORI number. I would recommend that everybody signs up to the Trader Support Service. This is a service free at source provided by the UK government through a consortium headed up by 𝗣𝗣𝗘𝗟 that will allow you to get declarations completed to also use the simplified Fortior declaration under the CFSP. Also to get use of a duty deferment account, their duty deferment account, if required, if you have at-risk goods. I would encourage everybody to speak to their GB suppliers and to their hauliers to get those companies signed up as well. Consider your Incoterms with your suppliers. Ensure that you know who's responsible for what. For the first time ever, because we haven't needed it, for the best part of 50 years, there's been a strengthening of ties and procedures and arrangements within the European Union. This now is required to know if your goods are ex-works, delivered at place, delivered duty paid, or whatever. Speak to your carrier as well and find out how they are prepared for Brexit. This is where a number of issues resulted in vehicles not getting into ports, not getting through ports. There was, unfortunately, some carriers unprepared for what was to follow. Check your commodity codes as well for the goods that you trade in. Ensure that you know what your commodity codes are. Your suppliers should be your first port of call. I was asked the other day, how accurate do you need to be in your commodity codes? Depending on Incoterms, you or your supplier is responsible for ensuring that it's the correct commodity code for the goods that you're moving. Incoterms, this is a slide that I've shared from Trader Support Service on Incoterms 2020. You may also have heard of Incoterms 2010 and Incoterms 2013, but these are the latest Incoterms. And some things have been removed from this. We have delivered duty paid. We no longer have, as I can see on this, delivered duty unpaid, DDU, which were in previous Incoterms. So just check where your responsibilities lie. Very quickly, regulatory alignment. In addition to customs, I don't want to call it a border, but customs requirements and movements from GB into NI, you need to be aware of the regulatory alignment requirements. We remain aligned with the EU. What that means in real terms is any regulatory requirements you had before, you still have. Be aware of the different conformity markings that are out there now. You will be aware of things like the UK CA mark, the UCA mark. You will be aware of the CE mark, which is the university recognised, and the EU mark for conformity and quality. There's new marks that you will maybe see if accredited or certified by an a UK certification body, which is the UK NI mark. And there's a copy of these in the slides. Colleen will cover the VAT changes in her slides later on, so I will leave that section to herself. How to sum this up? I said at the outset that I wanted to focus in on the changes, but also to remain upbeat and positive. I believe, and I have not changed this view over the course of the last number of months, weeks, or years, that as it was put out in the Cabinet Policy paper, the arrangements under the Northern Ireland Protocol is a unique arrangement available only to Northern Ireland businesses. And I believe that as a result of those arrangements, there is a comparative advantage for Northern Ireland. I understand completely that there is businesses in GB who have decided to focus in on the GB market as opposed to deal with the regulations and the requirements on moving goods into NI or into the EU. Some occasions they're not aware of the special arrangements and the derogations and so forth for Northern Ireland particularly. And I know EU businesses that have decided not to trade with GB, but I'm confident that those gaps will be filled up, and people and entrepreneurs will look at the opportunities that exist here in Northern Ireland going forward. Thank you to Colin. Thank you to the rest of the panel for the opportunity today. I know I whizzed through things very quickly, but I hope that was useful for everybody, and I look forward to getting some questions later on during the panel.
Okay, Jonathan, thank you very much for what was an incredibly comprehensive presentation. If maybe you could just stop sharing your screen when you get an opportunity as we move on, and we'll come back with your contact details later. But as I said, I think you delivered an immensely detailed presentation, which has really brought us up to date on what the key issues are. So thank you for that, and we'll come back to you during the Q&A. And just to remind people to submit any questions that they have for the Q&A at the end. Seamus, you're very welcome again, and thank you for agreeing to be part of our session. I suppose the last few weeks have been a very busy period, not just for yourself, but for the logistics industry as it grappled with the complexities of getting goods on and off the island of Ireland, whether that's through the ports in Northern Ireland or out through the ports in the south. Perhaps at this stage now, I suppose we're 3 weeks into the new working arrangements. You could give us an up-to-date position on where we are and what are the key issues that the businesses need to be thinking about.
Of course, thanks very much, Colin, and thanks to the Chamber as well. And I have to say, fair play, Jonathan, there, a really good presentation. You covered a lot there in a short space of time, and I even managed to learn one extra thing there as well, so cheers for that. You're quite right, Colin. I'll keep this short and sweet. I'll keep a lot of it for the Q&A afterwards. But yes, certainly the first 3 weeks of January have been huge upheaval for logistics, because we've tried to unpick a trading relationship that's been built really since 1973, and we've done it overnight, the changes to that. I'll focus on just a couple of key areas where the main problems are coming from. So the first one, I'll talk about really the trade imbalance with Great Britain. So goods are unfettered from Northern Ireland going to GB. That's a benefit of the protocol. We're also unfettered with the EU 27. The issue is that, and the common theme in market is that a lot of GB suppliers simply weren't prepared for this change in trading relationship with Northern Ireland. The eye was on GB EU and not in Northern Ireland. And I would categorise a lot of these businesses in GB into 3 camps, and they're all the U's. They're either unaware, unprepared, and probably the most worrying of all, the unwilling. And they're the people we really need to make sure, give them the confidence to start trading with Northern Ireland again. So in the first week, we had everything. We had SMEs and we had large multinational blue chip companies who, when deliveries were being arranged to take goods to Northern Ireland, they simply were given the 1,000-yard stare in response, going, what are you talking about? What customs controls for GB to Northern Ireland? So there's been a huge learning curve. And I think that example is best illustrated in the Trader Support Service, because up until the end of the year, the TSS had about 25,000 registered businesses. In the first 3 weeks of January, they've now grown to 30,000. So a 20% growth in online registrations for the TSS. And the vast majority of those new registrations were businesses in GB. So that's where we've had the problem with businesses playing catch up. And that can be best illustrated in the haulage sector. The business model for any haulier is a round trip. So you send goods out from Northern Ireland to GB based on getting a fair price on the lorry coming back laden as well. At the moment, I was involved in a meeting last Friday with the Secretary of State and with Michael Gove. And I spoke to about between 20, 25 hauliers that do cross-channel work. And the rule of thumb at the moment is for every 3 lorries that are leaving Northern Ireland with goods for GB, 1 of those lorries is coming back empty. So there's a huge cost being incurred with this because those GB suppliers haven't been prepared. So there's less goods coming back the way. And probably it's a bit like that film, The Perfect Storm, because we obviously have these GB businesses that weren't prepared for the Northern Ireland Protocol. And then that coincides with the COVID lockdown. So we don't have fashion goods, homeware, or hospitality goods for restaurant sector, etc., coming across the other way. So there is this downturn in volume. And hauliers are having to incur this cost of shipping trailers back to Northern Ireland empty, because simply, if they don't get that equipment back to Northern Ireland, they would no longer be able to facilitate the ongoing and uninterrupted manufacturing supplies leaving NI bound for GB. So that was something we've stressed to the UK government last week, is that we need some action on this quickly. We did propose some form of financial help on this, would be audited with the empty running of those vehicles back on the ferries. And then there's the cost of the overtime with staff. We had one haulage company that were on average, up until 2 weeks ago, we're waiting 11 hours for a vehicle to find a laden journey back to Northern Ireland. Last week, that 11 hours increased to 19 hours, waiting for a return journey as well. On the trade imbalance, that's where we are with that. You know, obviously, as the economy opens up, we should hopefully see that rebalance, and then coupled with GB businesses obviously getting into grips with the Trader Support Service and the formalities, we should hopefully see that addressed over time. The other issue is the sanitary and phytosanitary controls, so movement of food coming in. I think what Jonathan says there, the Trader Support Service, feedback now has been, the positivity has been increasing every week. I've spoke to one customs agent here last night, and they said in their own words they're flying through declarations now, so that's a positive. The thing that's really stalling the ball at the moment is the SPS controls. That's the movement of products of plant and animal origin, the regulatory standards which Jonathan mentioned. And on day one, basically, my mobile phone went at lunchtime on New Year's Day. And it was from members whose lorries were being detained at the Belfast border control post. And what it was, lots of goods were coming in without a pre-notification. If you've got food coming into Northern Ireland now, you have to notify DERA in advance of what the commodity is, when it's arriving, where, and who it's from, where it's going to. People weren't doing that because the guidance was so flippant and vague up until the end of last year, simply due to the last-minute nature of the deal, and guidance right up to the 11th hour. So we had lorries arriving for the first few days. We're literally having to do these pre-notifications retrospectively on the ground at the border control posts here in Northern Ireland. And testament to the DERA officials, to the veterinary staff, they've been first class on this. They are helping members and businesses keep the goods moving at the moment. But what we've got to watch for is the grace period. So at the moment, a lot of these products do not need an export health certificate. They still need to do the pre-notification using Trace's IT system, but there's no EHC. That grace period is going to expire on the 1st of April. Primarily for one reason, is because the European SPS rules will change, I think, on the 14th of April. So there'll be this divergence automatically, and the grace period ends then. What we need probably is the UK government to unilaterally decide, you know what, we'll follow the EU regs, so we'll do a copy and paste job, and then we can extend that grace period. So that's something we're actively lobbying for, because otherwise the sheer volume of EHCs could overwhelm DEFRA, official veterinary staff, and GB, and obviously the businesses. And it's just another level of red tape and admin, which we don't want businesses in GB saying, you know what, it's too much hassle to trade with Northern Ireland now. So we've got to soften that blow on that. And then we also have the grace period. There are some products coming in do need an export health certificate, and they are products on the prohibited and restricted list. So things like sausages, some minced meats, cured meats, etc., processed meats, because at the moment it's illegal to actually import those restricted and prohibited goods into the EU from a third country. But the UK voluntarily aligned on those regs for 6 months. So that's another cliff edge for July 1st, but it's that one we need to watch for the 1st of April, sorry. And the last thing, basically, maybe if relevant to your members there, I'll touch on, it's the movement of goods, the transit of goods. Now, Warrenpoint Port, the natural hinterland, a lot of it's Northern Ireland, a lot of it's in the Republic of Ireland, and there's a real issue with goods. How do we clear goods arriving into places like Warrenpoint from GB that are destined for the Republic of Ireland? And at the moment, the guidance has been a little bit all over the place. I've been liaising with HMRC, with Irish Revenue and Customs, with Trader Support Service. The best we can come up with at the moment is that if you are moving goods from GB, let's say into Dundalk, what you do is that the business in Dundalk, either one of three things: you set up a Northern Ireland subsidiary, which then they're the importer of record, and you do your clearance when the goods come into Warrenpoint. or you appoint an agent in Northern Ireland who will register with the Trader Support Service, and they take on the liability of the importer for any customs debts. Or option number 3 is the Northern Ireland carrier or haulier registers in TSS, and they take on that liability. So that's how you do the clearances here. Or you can do a transit movement from GB going into the Republic of Ireland as well, using the T1 transit document. So there's some of the things basically at the moment that's rearing its head. Obviously, a lot of your members will be aware of the problems in Dublin. A lot of hauliers are avoiding Dublin at the moment. Things are a lot more stringent with controls in Dublin. And obviously, we've seen the advent of the direct sailings into Cherbourg and Dunkirk from Rosslare. A lot of exporters are now using that route. Be warned, capacity is a problem. You're probably looking at maybe about 5 to 7 days waiting time if you called them today looking for space on a boat. I think Stena Line's seen a 300% increase on that. So it is working for a lot of businesses. And what I'm saying to businesses in GB is obviously, get on top of the formalities to Northern Ireland, but also prepare for the 1st of July, because what Northern Ireland is experiencing now, that's what GB is going to face from the 1st of July, because that's when the GB starts imposing formalities on EU imports. So we've got to make sure our GB suppliers are on top of their NI supply chains before their attention is diverted to other problems in July. Thank you.
Okay, Seamus, thanks very much for that. Again, very comprehensive and dovetailed on into what Jonathan was covering earlier. We have had some questions coming through, and thanks to Deirdre and Jonathan for answering those as we go along. We'll pick up some of the other questions when we have some time left at the end. Our next speaker, I'm delighted to welcome Colleen Flanagan from PKF-FPM. To cover the issue of VAT. VAT has been something that our own members have been asking about, and I know that we could probably do a session on VAT on its own. So Colleen is going to give us a quick overview of that, and if you just bear with me 1 wee second, I'm just going to share my screen so Colleen can run through the slides. So if you just bear with me.
Thanks, Colin.
Yeah, hopefully everybody can see that. Colleen, I just pass over to yourself, and you can tell me if you want me to move on the slides.
Super, thanks, Colin. So yes, hi everyone. My name is Colleen Flanagan, and I'm a manager at PKF-FPM Accountants. And today I'm just going to talk briefly about some of the major VAT implications of Brexit for Northern Ireland businesses. So we move on to the first slide, please, Colin. And this first slide, I suppose, serves to demonstrate that for many Northern Ireland businesses, many of the transactions that they're engaged in will remain largely unimpacted by Brexit. So, for example, if we've Northern Ireland suppliers making supplies to GB consumers, these will continue to attract UK domestic VAT, as was the case pre-Brexit. Similarly, for Northern Ireland businesses supplying goods or services to customers in the rest of the world, so outside of the UK or the EU, again, these transactions will remain largely unimpacted, with the exception of Northern Ireland traders who are importing goods from the rest of the world. It's very important from a cash flow perspective to note that they will now be entitled to avail of postponed VAT accounting. And postponed VAT accounting is something I'll speak about in a little moment. We've been receiving a number of queries from our clients around the treatment of supplies to EU-based consumers. So that's something I want to focus on for a moment. Where a Northern Ireland business makes a supply of goods or services to an EU-based VAT-registered customer, they will continue to zero rate the supply, and the EU-based customer will self-account for the VAT arising. So exactly the same as the position pre-Brexit. Similarly, where a Northern Ireland business supplies goods to a non-VAT registered private customer, the distance selling rules will continue to apply. So you continue to apply your UK VAT until the specific country distance selling threshold is reached in the country of destination of the goods, at which point you start to apply the VAT rules in the country of destination of the goods. And there's little asterisks here to indicate that there is in the tracks in July 2021, and again we'll talk about that in a moment. Similarly, for Northern Ireland businesses supplying services to private customers in the EU, the rules will remain largely unchanged, with UK VAT continuing to apply. Again, we have a little asterisk here, as there are some exceptions to that rule, and we'll discuss them now. Can we move on to the next slide, please, Colin? However, there are some cross-border transactions which Northern Ireland businesses engage in that will change as a result of Brexit. And I've outlined some of the key changes that are impacting businesses across Northern Ireland. So where we have the movement of goods between Great Britain and the Republic of Ireland or the EU, from the 1st of January, this will be considered an export from the UK and an import to the EU. And this impacts many Northern Ireland businesses that are engaged in drop shipping arrangements, whereby the Northern Ireland businesses purchases goods from a GB-based company, and those goods are delivered directly to a customer based in the Republic of Ireland or the EU. In this type of a transaction, import VAT is now payable, and you need to work with your customers and suppliers through Incoterms to determine who will be responsible for the import VAT, and that party will also likely be responsible for the filing of customs declarations, potential payment of customs duties. And so there are a host of VAT, customs and commercial considerations with this type of a transaction from the 1st of January. Secondly, for Northern Ireland businesses who supply services of a professional, technical or intangible nature, so this would include consultancy, engineering, legal accountancy services. And where those services are supplied to private customers based in the EU, historically, these would have been subject to UK VAT, but from the 1st of January, these will be deemed to be outside the scope of UK VAT, and the VAT rules in the country where the services are supplied will need to be considered. Thirdly, we have services such as the letting on hire of goods, which are subject to the use and enjoyment provisions. Historically, the use and enjoyment provisions applied where the place of supply was the UK, but the services were used and enjoyed outside of the EU, and that effectively became payable outside of the EU. As the UK is no longer in the EU, where these services are used and enjoyed in an EU member state, the Northern Ireland-based business may be required to register and account for VAT in the EU member state where the services are used and enjoyed. And finally, all Northern Ireland businesses who are supplying digital services such as telecommunications, broadcasting or electronic services need to be aware that from the 1st of January, the UK VAT-MAW scheme is no longer available, and they must register for the non-union VAT-MAW scheme in order to avoid multiple EU VAT registrations. So that really serves as a very high-level overview of some of the key changes coming into play. And if your business do provide any services that are likely to be impacted by these provisions, I would advise seeking additional assistance. Next slide, please, Colin. I thought it might be helpful to run through some of the queries that we're receiving on a frequent basis from some of our clients. So firstly, what does postponed VAT accounting mean, and how can I apply for it? Postponed VAT accounting is a method of accounting for import VAT, and from the 1st of January, it's available to VAT registered traders in both the UK and the Republic of Ireland. Import VAT would be payable, for example, where Northern Ireland-based traders import goods from the rest of the world, or where goods move between GB and the EU. And import VAT was historically payable at the point at which goods entered a country, and there's a potential time delay then between when an input VAT credit can be claimed on traders' VAT returns. However, under postponed VAT accounting, traders can now account for import VAT on their VAT returns, at which point an input credit can be claimed simultaneously. It becomes an in and an out on the VAT return, and there's no impact on the business's cash position. There is no formal application for postponed VAT accounting. However, you do need to include an indication on your customs declaration that import VAT will be accounted for by way of PVA. And so if you're working with a customs agent, ensure that they're aware that you wish to avail of postponed VAT accounting. Secondly, many businesses are questioning, do I need an XI VAT number, and when should I use my XI VAT number? So under the protocol, Northern Ireland is in a very unique position in terms of we remain within the UK VAT regime, but we continue to follow EU VAT rules on goods. And that means that Northern Ireland are entitled to avail of many EU VAT simplifications that GB counterparts are not. And from the 1st of January, Northern Ireland-based businesses trading in goods with EU customers and suppliers will be recognised by use of their XI VAT number. And the XI VAT number should be quoted on all correspondence, including invoices, with EU suppliers and customers from the 1st of January. Again, there's no formal application process. However, you should notify HMRC that you're a business trading in Northern Ireland or trading with the EU. And this can be done by way of your government gateway. You should ensure that your invoice templates are updated to reflect your XI VAT number where required. As I mentioned, Northern Ireland can continue to avail of many of the EU VAT simplifications which existed pre-1 January 2021. So we can continue to use the distance selling rules and the intercommunity supply provisions as we've discussed. Northern Ireland traders can also continue to avail of triangulation, which is a simplification which allows suppliers to zero rate supply of goods where they move between 3 EU member states. We had a very welcome announcement earlier in January that Northern Ireland-based businesses would continue to be entitled to apply VAT to the margin achieved on the sale of second-hand cars rather than the full value of the car. And thirdly, I want to discuss the EU VAT refund system. This is important for many Northern Ireland-based businesses, and it would apply where we have a Northern Ireland trader who incurs VAT in another EU member state, but where they're not registered for VAT in that EU member state. So we would have many clients, Northern Ireland traders, who incur VAT, for example, on diesel costs in the Republic of Ireland and may not be VAT registered in the Republic of Ireland. Historically, the trader submitted an electronic VAT reclaim, so an EVR claim, to HMRC in order to claim back that VAT. Going forward, EVR claims will be available to Northern Ireland traders supplying goods to EU member or supplying goods, but not where that VAT is incurred in relation to the supply of services. Where service providers incur VAT in another EU member state, they will be required to submit a paper-based claim to the authorities in the relevant EU member state in order to claim back that VAT if they're not VAT registered. And finally, I suppose, as they say, with privilege comes responsibility, and that's true in the VAT world as well. So whilst many GB counterparts don't need to complete EC sales lists or interstat returns going forward, Northern Ireland-based businesses do need to complete EC sales lists in respect of the supply of goods to EU-based customers and also interstat returns. Next slide, please, Colin. So finally, I just wanted to wrap up, and whilst I'm aware that at the moment all resources are being used in dealing with the Brexit impact on business and the COVID impact on business, there are significant VAT reforms coming down the tracks which all businesses in Northern Ireland need to be aware of. So in March 2021, with the introduction of reverse charge VAT for building and construction services, and that effectively shifts the onus for accounting for VAT from subcontractors to principal contractors in many instances. In April 2021, we've the implementation of Making Tax Digital Phase 2, which effectively removes any room for manual intervention in the VAT return process. And then finally, we've significant EU VAT e-commerce reform coming into play in July 2021, which will effectively eliminate the distance selling rules or abolish the distance selling thresholds and create a one-stop shop system whereby an EU-wide VAT return can be submitted. So that's basically the 2021 VAT landscape in a whistle-stop tour. I'm happy to take any questions, but for now I'll hand back to Colin.
Colleen, thanks for that. Again, a very comprehensive presentation and a quick overview on what is a complex area, and you will be here to pick up some questions. If people could just keep sending the questions through, some of them are being answered as we go along, and if we have time at the end, we'll pick those up at the very end. Finally, I'm delighted to welcome Deirdre Maguire from InterTradeIreland. During the whole Brexit process, InterTrade has been at the heart of providing very valuable advice and support to businesses. In the words of Boris, Brexit is done, but InterTrade is still on hand to support businesses. So I'll hand over to Deirdre to let us know what advice and support is still available. Deirdre.
Thank you, Colin, and also thank you to the Chamber. Fantastic webinar today as well. Really good learning from all the speakers here as well. So just before I want to start, just something Seamus mentioned, you know, about picking up something new. Everybody's learning here, so we're all on the same journey, and InterTradeIreland is actually on that journey as well. We do have supports for business, and I guess I'm here today just to let you know quickly what they are, and just to let you know where we're at on the stage of that journey as well. So we do have supports, and they come in two ways. The first one then is the voucher supports, the voucher funding. It's £2,000 worth of consultancy support for a cross-border trader. So if you have sales in either jurisdiction, you buy or sell in either jurisdiction, and you're a cross-border trader, you will be eligible for that support. If you've used it before and your advice is historic, come back in and ask us. We're doing our best to try and help revamp and go back over old information that was provided. So you do have that option as well to reapply. So that's £2,000 worth of consultancy support, or 2,250 if you're based in euros. And the other thing that we have that is a key part of our offering at the moment, and will continue to be as we move forward, is the digital offering. You can access that through our website from InterTradeIreland.com, but it actually, you know, I suppose the way to describe this is, for every part of Brexit, there's a story for every business, and every business has a different thread. And, you know, you might be trading in products of plant and animal origin, composite products, you might be trading in services. Your question might be about company ownership, directorship, it might be about GDPR, it might be about mutual recognition of qualifications, and you might have lots of things that you need to ask questions on. So what I would suggest that you do is continue to map out your supply chain, take all the advice on hand. And what we've done in InterTradeIreland is we've designed our website in a couple of sections. And I want to quickly just mention to you where they are, because we have some really good links in there, and we will build on these as we move forward and glean more information. So we've got the section for trade in goods, we have a section for trade in services, we have a section on people, and we'll be soon adding a little bit more onto that as well. In the trade and goods section, we've got information on how to get your commodity codes. We've got lots of stuff on Incoterms and rules of origin, and one that is proven to be very, very useful at the moment is the trade routes, what customs paperwork section. And in that, we've separated out where you trade, so north, south, south, north, GB, NI, NI, GB, Ireland, GB, GB, Ireland, all those trade routes, and the links into wherever you need to go to. And a lot of the things that Jonathan mentioned today, trader assistance, TSS, EORIs, they're all in there, and all the links can be found and accessed in there. And also rules of origin, which again, we're going to be working hard to get information to you on that. I would just call out to businesses as well. There's a couple of things here. Just you're going to be doing supplementary declarations now, and in a couple of weeks, the Trader Support Service will be contacting you and asking you for your commodity codes and lots of details. So there's tasks coming down the track in that one if you're trading in goods and you've dealt with GB. And also with rules of origin. So the origin of your product, you'll need to be putting that in your invoice. But over the course of this year, your commodity codes are going to be so important, because you're going to need to find out what origin your product is, and what category it falls into. So all these things we continue to support on and develop. And then just the other sections then, trade and services, there'll be information on VAT. Aoibhín's presentation was fantastic. I think it was really, really well done. Aoibhín really well laid out, and we do have section there on VAT, again separated out for each trade route, business to business, business to consumer. We've also got sections on general trade and services, e-commerce, mutual recognition of qualifications, company directorship, again we'll be building on that. I know there may be changes there. And then on the EU settlement scheme and on people. So there's a lot there, but what I would say is continue to use the voucher supports, absolutely get the consultancy advice for your business, keep asking the questions of us. We may not always get the answers straight away, but we'll continue to work hard to try and get them. And if there are things that you need to know more about, or you think new issues are emerging, please contact Brexit at InterTradeIreland.com, and we'll do our best to get that information into a digital form and get that out and share that with the wider community as well. So that's just a very quick update, and Brexit at InterTradeIreland.com is probably your first point of contact if you do need that support.
Thank you very much for that, Deirdre. Very, very comprehensive, and just to echo again what Deirdre has said, the advice and information available on their website is superb, and they are on hand to answer any question that you can't find on their website, as well as providing that voucher. I'm just looking through the questions. There were a couple of questions there on VAT that Colleen has just answered. There was one question. We've probably maxed out our time. We're on our hour now anyway, so I think unless there are some other questions coming through, there was just one question. It's probably for yourself, Seamus, and Jonathan had partly answered it, and it was about financial guarantee needed to transit goods from Europe to NI via GB land bridge, and who owns and manages that guarantee. And Jonathan had said that yes, he understood that there has been some delays in arranging this due to demand, but that you would probably provide a more substantive answer. But that Jonathan's understanding was that it is the carrier's responsibility. Is there anything further that you want to add to that at this stage, Seamus?
Normally on the transit, what I am hearing some people, I did speak to one company recently, a carrier that was moving heavy machinery to continental Europe from Northern Ireland, and they brought the machinery to Tilbury Port under a T2 transit. Now, because the machinery was being left at the terminal in Tilbury to be driven on to the ship, HMRC was saying that was a break in the bond of the transit movement. So that's something to be wary of under transit. With the guarantees, yes, like I said, with that option for bringing the goods into NI ports and ROI, the carrier can be registered. They can appoint the carrier or an agent who will take on that potential liability. I would suggest something like that. The Trader Support Service can assist with the advice on that. But like I said, a lot of this here, I think what Jonathan says there, we're still getting information as we go along, Colin.
Okay, well, look, thanks for that, Seamus. I think all of the questions that have been asked through the Q&A have been answered, apart from one that has just come in. How could a carrier get the guarantee unless it is very, very wealthy business? Is there a push to get insurers to provide without personal guarantees? Not sure whether Seamus or Jonathan would understand that question.
I'm almost looking at Jonathan there to answer that. That's a perfect one for you, Jonathan. In my opinion, yeah, it's something like where you would almost have a letter of credit, I think, from a bank, maybe enabling that if you didn't have the cash reserves. But I'll let Jonathan have a go.
Thanks, Seamus. I appreciate that. I am working with a number of carriers at the moment, and those financial guarantees. So we'll be aware, or you may not be aware, there's two types of guarantee requirements, comprehensive guarantee requirements. The UK government made an announcement last year that they were going to waive the requirement for GB companies to require a comprehensive guarantee on tariffs. This is a part of their duty deferment account, and that's actual debt or actual duty. The transit element of it is potential duty. And I read last week, and I can't for the life of me remember where the article was now, but there has been delays with the NCTS system and getting those guarantees in place. Companies are putting them in place, but there are, as that question alluded to, a number of insurance companies providing those guarantee facilities as well. But people are, as Seamus has said, looking at other options and other ways of clearing goods, very much so in case of moving through Northern Ireland, being able to declare the goods at risk, putting them into free circulation, clearing them in Northern Ireland instead of going down the transit route. But yeah, it is a very, very costly process and a risky process for representatives. We talk about customs representatives being direct and indirect representatives. and will they take on a burden within that indirect area. Same as with the duty deferment account arrangements through the trader support service for your own duty, where you don't need to go down that comprehensive arrangement or comprehensive guarantee requirement for your own duty deferment account. So that is a kind of politician's answer, unfortunately, but there is been delays and it is a burden, you know, for carriers. Okay,
thanks for that. I think we'll maybe just call it at this stage. Just finally to say, as a chamber, Newry Chamber has been delighted to be able to host this afternoon's event. We hope it has answered some of your questions and you now have a better understanding of what this all means for your businesses. As I said at the start, I will send out the slides, and we'll also have a video available. It will probably be available from tomorrow. And more importantly, I'll send out the contact details for each of our panelists if you want to follow up with them afterwards. So thanks at this stage to Jonathan, to Seamus, to Colleen and to Deirdre for their contributions this afternoon and for giving up the time to help Newry Chamber and to help businesses in this area. It's very, very much appreciated. Just a quick update that we have a North-South conference coming up on the 10th of March, focused on post-Brexit and building cross-border and sustaining cross-border trade indeed. And just to confirm that the Taoiseach will be making a contribution at that, and our Finance Minister, Conor Murphy, as well as a range of policy and business speakers. So we hope to be sending details on that out next week if you want to keep an eye out for that, and any other Brexit type events that the Chamber will be running in the next couple of months. If you'd like to find out more about Newry Chamber, our president is in conversation this Friday with Sarah Travers, and the link for that webinar is on our website. So all that remains for me to say is thank you very much to our panel again, and thank you very much for everyone joining us this afternoon, and good afternoon.